Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. We have U.S. stocks jumping in the latest session, wiping out Monday's plunge as traders unleash risky bets that the White House will clinch crucial trade deals with their top trading partners. And we have also seen a series of reports just grooming expectations that tariff-related hostilities may be easing as the U.S. makes progress in fleshing out some of these agreements, including with China. And looking at the benchmark numbers, the Dow Jones Industrial Average was up by more than 1,000 points, 2.6% to the green at 39,187. The S&P 500 gained 2.5%, settling at 5,288. And that is also its best day since April the 9th. And the Nasdaq Composite was the outperformer, rising 2.7%, coming through at a reading of 16,300 points. And the major averages spiked on news that Treasury Secretary Scott Bessent told a group of investors that there will be a de-escalation in the trade war with China. Well, for more insights, we are joined by chartered market technician Mark Newton. He is the Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, great to have you on the show. How are you doing these days?
Hi, Ryan. I'm doing just fine. Thank you for having me on, as always.
Yeah, it's been quite a choppy few days back and forth. Last week, I think mostly we were seeing quite a bit of pressure, but things are starting bouncing back to some extent. Give us the lowdown. What is it looking like for you right now when you see some of the indicators around the momentum?
Yeah, technically there has been some improvement in recent weeks. I think it's important to highlight the fact that really volume and breadth experienced a pretty major change 2 weeks ago that really helped to set off a bell for the market to suggest that we were possibly in lows and could start to rally. And by that, I mean, we saw a meaningful declining volume into the 7th of April, followed by meaningful positive volume to the upside, along with a huge advanced decline reading. And so, following a very difficult period from mid-February, that was a pretty big signal that the market was actually attempting to bottom out at a time when pessimism had reached, very fearful, if not capitulatory type levels.
Yeah, it does look like we are seeing some stability of sorts. I'm not sure whether that's the right word. At least looking at the VIX, is not as high as what we've seen before, where you were looking at levels near 50, but now it's near 30. Is that a sign that things are getting calmer with all the developments on the tariff front?
Yeah, that's a great point, Ryan. And I think investors would be really need to concentrate on the fact that the VIX has fallen about 45% in 2 weeks, along with the fact that junk bond spreads have also really started to tighten again. And so, that really eases a lot of the concern around the fixed income market at a time when, that seemed to be the main catalyst as to the Trump pivot a couple weeks ago. And, to your point earlier, Scott Bessent's comments about de-escalation certainly are very important. I think that really the worst news is likely in the market at this point. Even if there were some unsettling further developments, I don't see the VIX going back to highs. And if anything, that the market seems to have absorbed all that news and is now starting to concentrate on earnings with the Mag 7. So that's all positive. Furthermore, one final point on that is that Trump, in his comments after the market close today for the U.S. on Tuesday, the 22nd, said that there is no pressure to fire Chairman Powell and that he's not going to be considering that at all. And so that is really interesting and refreshing news, I think, given that many were concerned about, the Fed's autonomy in being able to conduct business, and be free and clear of the president.
Yeah, great points. All these comments helping to clear the air to some extent, providing the certainty to some degree for markets to look at. You've got the tariff situation seemingly on the path to de-escalation. And like pointed out, even with the Fed Chair Jerome Powell situation, there is also some clarity that he is not going to be fired, even if Donald Trump wanted to. There's another separate story about whether it's legal or not. But yes, you do have some positive developments on that front. So it does look like you're looking at quite a bit of the worst of the news being priced in already. So it's going to be upwards from here. Is that how to approach U.S. equities right now?
I do believe that a spring low is in place, and I think it is likely the S&P has started to move up towards 5,500, and so it is a very positive short-term development. Obviously, the market has a lot of work to do, just given how negative the momentum and trends have been since February, and so it's difficult to say that markets are going right back to highs right away. It should be, as I say, 2 steps forward, 1 step back, and so that's sort of a normal type trajectory that I think, could materialize between now and the middle part of June. But, I think this directly goes in line with normal seasonality trends in a new administration, that normally the first quarter is very rocky and rough, and then we tend to bottom out as we get used to the policies, and start to move higher. And who's to say if we can ever truly get used to the policies here, but at least people are hoping for some stability. And, I think everybody's hopeful that we'll see some negotiation and really some retreat from the recent tariffs. That would certainly be more encouraging towards risk assets.
Yeah, Mark, and you also are watching the levels quite closely. So we've got the S&P 500 at 5288 right now. Where are the resistance and support levels, right?
Yeah, so just as of today on Tuesday, the S&P did in fact break a minor 4-day downtrend. So that happened right around 5260. And that was really important and positive for the S&P today. We saw a similar action in the NASDAQ 100, along with the Dow, along with actually the Russell 2000. So short-term breakouts only. Bigger level is going to be 5,500, 5500, and that's really the important level to exceed to really have a lot of confidence that, the market can really start to move higher aggressively. So, for the time being, I think it's right to be bullish. And, I think it's wrong to avoid U.S. stocks. I mean, the Mag 7 has had substantial underperformance versus the rest of the world. And now it's down to levels that make great sense with regards to valuation. We're still seeing very good earnings out of most of the Mag 7. Tesla just reported today. And so, unfortunately, did miss. But honestly, Musk saying his plans are to step back from Doge in May is a positive sign in the aftermarket for Tesla. We are seeing shares rise. So I have some, encouraging thoughts about, the U.S. equity market at a time when everybody seems to be in this sell the U.S. And I think exactly the opposite. I think it's really time to actually look to buy the dip here and think that we can make progress in the weeks ahead.
Yeah, a couple of points there to unpack. So you've got earnings season in focus, and you've got the U.S. dollar in recent days going through a bit of a slump. Yep. So we've seen in the latest session, the U.S. dollar on the dollar index at least up 1%. But in the past few weeks, some folks have been selling it in line with how they are viewing the U.S. economy. So year to date, down over 8%. What does this mean for earnings if we get a stronger dollar down the road or even a weaker one?
Well, I mean, historically, as the dollar weakens, normally that's a good time for risk assets. This has been a very unusual period that the dollar decline has coincided with a time that equities have also weakened. But a lower dollar is going to be very good for earnings, as is crude oil, which went from 80 down to the mid-60s, and that'd also be good for inflation. I think people are not really paying attention to that and only concentrating on tariffs when there actually is some good news, with rates having fallen in recent months, along with the dollar falling. So those are good for risk assets. There has been a little bit of a split between interest rates and the dollar that's been important and unusual. But my thinking is the dollar and rates are both going to continue to trend downward, over the next few months. And so any minor bounce in the dollar could still lead to further weakness. I mean, dollar yen is down to near 139. That's a really important spot for that. But, still no meaningful evidence as to why the dollar should immediately start to rise. So these trends in currencies tend to persist and oftentimes can be stronger than the trends we see in equities.
Yeah, the dollar just hitting fresh 3-year lows in recent sessions. So definitely one to track as we see all these developments play out. We've been in conversation with chartered market technician Mark Newton. He's the managing director and global head of technical strategy at Fundstrat Global Advisors. Mark, as always, fantastic chatting with you. Thanks for your time.
Thank you, Ryan. Take care, everyone. Bye-bye.
Take care. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.